Hi, hello, welcome to Letham Trading. Now we are going to see Nifty end of the day analysis of 4th January and the trade setup for tomorrow. See what we discussed yesterday's video. If the market opens here in this range, if you see a rejection at H3, then you can go for the put position. See what happened today in the market. The market opened almost flat and observe the first 5 minutes candle. The first 5 minutes candle is a bearish candle. See what we discussed is, if the market is in this range and if it breaks to any of the side, then you can go for that trade. But observe the first 5 minutes candle. The first 5 minutes candle is a bearish candle and it is an indecisive candle. And observe the second 5 minutes candle. If you see this second 5 minutes candle and if you feel like it is breaking to the top CPR, then you will go for the call position, right? But see, observe yesterday's graph. It is almost similar to yesterday's graph in the first few minutes. Observe this is breaking of CPR, but here how you can avoid taking a call position, that you need to know. See, if you are going to take a call position just by seeing this, if you feel like this is a CPR breaking, always remember you should take a trade where there are multi confirmations, right? For the whole day you are going to take one trade. If you are going to take one trade, how perfect your trade should be and how perfect your probability. See, if you are going to take a call position just by seeing this green candle, you need confirmations. Yesterday the market was too similar to this graph, right? But what happened? The market went up. Why? Because the IT sector was bullish yesterday. But for us also there are multi confirmations for yesterday. See, the IT sector was bullish and also this is red candle breakout, right? So and this is CPR. So there are three types of confirmations. But what happened to today's graph? Today's graph has no confirmation from IT sector. The IT sector has clearly to the downside. It has clearly broken to the down CPR. Then how can you go for the call position? Because see, if you see this downside breaking, if you go for the call position, the only sector should support Nifty is Bank Nifty, right? So if you see the Bank Nifty can go up to H4 only. If it is going to the bullish side also, it can go up to H4 only. At H4 there may be a reversal. So mostly the market is not at all supporting call position. That is the indication that the market is not going to be bullish. That is for sure, the market is not going to be bullish. But where you can enter the trade, that is the main point, right? If you see the first three candles, there is no entry point, and observe the second candle. If you take a call position, put position just by seeing this candle, it's up to you. You can't take just by seeing this candle. It will be just 50% of chance. So you'll definitely wait for the candles. So if you see the Bank Nifty, it has a clear confirmation that it has clearly broken the H3. And observe the Nifty graph. See this huge bearish candle. You cannot enter at any point of time in Nifty today because the market is too volatile, and you cannot see. If you enter here at this range after this candle's closing, there may be a chance that the market may take a pullback. Always remember, you should have a minimum stop loss. Otherwise, not taking a trade is a good decision, but you cannot randomly enter into the trade. So that was the reason. If you have missed to take put position, according to our strategy, we don't take a put position just at this point, right? So after this H4 breakout, you can take a put position, but you cannot take a put position just by saying this bearish candle breaking, because the 20 EM is far away from the graph. So we always discuss that if we miss to take a trade in the morning, we will definitely wait for the almost 1 hour, that is at 10:30 to 11:30 range. Remember one point: when the market is in the same direction, then the direction will be at 10:30 itself. If the market is going to be in the opposite direction, then the market will take some time, and it will be around 11:30. That is, see here, the market has given us the movement at 10:30 itself. If the market want to go to the upside, then the market will consolidate here at this range for some time, and at around 10:30 to 12:30 to 11:30 to 12:30, then it can, after the consolidation, it can go up. But since the market is trying to be in the same direction, the market will give us the direction at 20 near to the 20 MA, right? Compared to Nifty, today Bank Nifty was a good trade setup. See, if you miss to take, definitely most of the traders will miss the first trade, right? So you will wait for some time for this 20 MA retracement. Here at this point, the market has clearly came near to the graph, right? So you can avoid this consolidation if you wait for at least 1 hour. So at this range, you can go for the put position. And this previous day low was broken clearly. 40 to 50 100 in Nifty, 40 to 50 points booking is possible, and in Bank Nifty almost 100 points booking is possible. So if you have traded once in a day, just avoid taking another trade. Today is not a simple day, but it is a trendy day. These are the days you should be careful while trading. You may feel like there is a reversal from this point, that is at H5, right? But the market is not in that direction. See, the market has clearly broken this range, so the market is trying to be trendy. Also remember one point: the distance between CPR, this is not a wide CPR, it is around 20 points range only. So the market is trying to be trendy only. Also, this Bank Nifty is indicating the trendiness. See, in Bank Nifty, it has clearly broken L4, right? So the market will take a pause, and it will definitely come up to L5 according to our strategy. If it want to come near L5, then the market will break L5 too in the Nifty. So the market is going to be trendy. In this way, you have to correlate in the live market, and you can take a trade, that is a single trade according to your strategy. I haven't taken a trade here in Nifty today because the stop loss is not affordable. See, if you enter here at this retracement, there is a chance the market may go up to this point also. But in Bank Nifty, there is a small stop loss. So you have to be in a position to take a trade in either in Nifty or Bank Nifty according to the analysis. And the first main thing is minimum stop loss. That's see, many of the traders are interested to know about tomorrow's prediction, but I'll suggest you search for the videos where you can get today's analysis. If someone is interested to tell you about today's analysis, that is the main thing you have to know, because predicting tomorrow's graph is not at all useful, but analyzing today's graph is the main thing how you can grow in your trading career. See, if you see this graph, if you are going to take a call position, that is you are a novice trader. But if you are not taking a call position here at this point, then you are an experienced trader. All of these will come to you when you are getting experience. If you see this graph one more time, that is after a week or a month, you'll definitely will not do any mistake, right? That is the reason experienced traders will have an edge compared to novice traders. Of course, you can you can be profitable one day, but you have to face these type of graphs day by day, so that you will get to know about the market so easily. And we'll move on to the next day. Yesterday, see, tomorrow the market is wide. See, it is very wide. And the main thing is here, L3 will act as a major support tomorrow. If the market opens around this point, the market will definitely be bearish only. If the market opens again is flat, then at L3 you will see a bullish candle. If you see a bullish candle, then only go for the call position. Remember, since the CPR is very wide, the distance will be very wide in this Camarilla points too. So if you see a confirmation candle, then only go for the trade. Otherwise, avoid taking a trade. Keep your stop loss very minimum. If you can't keep your stop loss minimum, then avoid taking a trade. That is the best thing what you can do in the wide CPR. So here this range will act as a major range. Above or below will decide the market for tomorrow. And if the market opens flat and if it goes to the upside, avoid taking a trade, because there will be complete consolidation. You can't enter a trade. If you see a trade at around 130, that is a retesting at H3 or at top CPR, then or breaking the H4 at 1:30 or 2 o'clock, then you can go for the call position. Otherwise, there will be consolidation only. If the market opens here in this range, there will be definitely a rejection from H4. But the market opening H4 around H4 is not so easy tomorrow, because it is this is closing right from 18,000 to it should open around 100 points gap up. This is not so easy. So the expected thing is the market may open here or here. If the market opens gap down, according to the price action, go for the trade. If it comes to this point for the first time, then you can go for the put position only. If it is consolidating, then you can go for the call position. That is all according to the price action in the live market. Observe for at least some time, that is up to half an hour or 1 hour. If you get a clear probability trade, then you can go for the trade. Otherwise, avoid taking a trade if the market opens gap down. Thank you. I hope this video will help you. Please subscribe to our channel.